Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Sean Brodrick, and we're going to be focusing on the energy markets, oil, natural gas, even talk uranium. Sean is the editor of Wealth Megatrends and resource trader, also the contributing analyst to Weiss Ratings Daily. Sean, look, a lot of the commodities seem to have lost a bit of momentum here, but the energy sector, there is a bright light in terms of some of the recent moves in natural gas that recently was above $3 or right around $3. Oil is back right at that $80 a barrel level. Again, very much still in a range that it has been for over a year now. Let's start off just generally what you're looking at in terms of stocks, opportunities in either oil or natural gas. Does one have your attention more than the other right now?
Well, the last four picks that I have given my subscribers have all been in natural gas because I think it's going to have a good run this summer. I think we are going to have a long, hot summer. And so I believe electricity demand is just going to jump enormously. And so I think that there are some good opportunities there. But, I also hold oil stocks. And yeah, with oil at $80, these companies, at least the ones we own, they're just minting money. That's a very good price for them. And I can say that about a bunch of energy stocks right now, oil or gas or both, also pipelines. They can do very, very well. Some of them seem to be under pressure, which I really don't understand right now because when earning times comes around, plenty of these stocks should just knock it out of the park. Should be very, very good indeed.
Well, Sean, just to that point, when you think about how much the oil and gas sector has repaired its balance sheets, paid off debt, restructured the companies over the last, let's say, 4 years, they've really done a good job of cleaning up their house, getting it in order financially. And so now, even at these prices, 280 net gas or $80 plus oil, these companies and even ones that have a mix of both gas and oil are making a lot of money. Does that mean that you're a little more interested in being in something like the bigger oil companies that pay a dividend because you feel safe that the dividends are more stable? Or are you looking at some of the smaller growth oriented companies?
Well, I always like dividends. I just do. I love a stock that pays me to own it. But I think at this point, especially in natural gas, you can look at some of the smaller plays that have been beaten down into the dirt. As long as they can make money at recent prices. Now, they can do that through hedging. They can do that because they have other things going for them. Maybe they're not the actual owners of the wells, but they're, doing pipelines, something like that. There's a whole bunch of different things, ways they can make money now. And we are going to see some of these smaller companies make money. That said, I think the big names, pretty much everything's priced in about them. Let me put up a ExxonMobil. Really, it's been in a downtrend since April, but it is coming up to test that downtrend. Though actually, I like CVX more. Chevron, yeah, but a very similar chart. It's just I think that they have more potential to increase their production. I think you should own at least one of the big majors. I would own one that's using new tech, and there's all kinds of new tech in the oil fields, robotics, AI, new stuff that is just going to use that new tech to increase their production from what they already have. Now, what will weigh on the large stocks is they keep buying mid-tier and smaller companies just to expand their reserves. And there's nothing wrong with that. What you really might want to look at is those companies that may have had some trouble because they don't have a lot of cash, but they have some nice reserves. They have some nice land positions. This summer could be a busy shopping season in the oil fields. We could see some of these smaller companies just snatched up. So I'm not saying you should put all your money in like one small stock, especially don't do that. But if you spread some cash out around a few likely prospects, that might be a good way to play it because I see definitely some more merger and acquisitions in the oil fields this summer.
Well, it's actually been one encouraging sign from that sector is some of the big deals that have come out, just a lot of action in terms of M&A. But Sean, if you're looking at any certain areas, whether it's in the US or in Canada or even abroad, any area that you particularly like for investment opportunities?
I have a bunch that have a US focus. Well, no, I actually own some Canadian ones too. Really, it depends on the company. I tend to prefer companies that are in the US or Canada simply because of the stable governments and how they're treated. And not to ignore your question, but one thing that I do want to bring up is no matter who wins the election, whether it's Trump or Biden, I think oil and gas companies will do really well. Both candidates want to see oil production and natural gas production increase as much as possible. They're going to keep providing incentives to get that done. And could be tax incentives, could be other incentives, stuff like that. So I think, they could really make some good green after the election. If there's anything holding back the oil and gas companies, we have seen some forecasts of like lower global demand, or maybe 5 years down the road, people will start using less oil and gas. I don't believe that. We're using more and more electricity and more oil and gas all the time. Just power. We need more power. Our civilization runs on it. And I'm sure my grandkids will be using oil and gas. It isn't going away. And good companies will do extraordinarily well. As to any particular region, not really. I really favor the US and Canada, but you know what? You could make me a good case on something overseas and I might buy it. It would have to be pretty good, though.
Well, Sean, to the point about the need for more electricity, I mean, we hear it all the time that, we're going to be phasing out fossil fuels, oil and gas, but the reality is they're used in 2,000 different industries, whether it's plastics or agriculture. I mean, there's a lot of reasons to use oil and gas, but there's these huge demands on electricity that are continuing to circulate, whether it's more EVs plugging into the grid or cryptocurrency mining using such, being power hogs, or all these AI data centers. Every narrative changes from season to season, but the reality is we're going to need a lot more electricity. So we're going to need all of it. We're going to need renewables, which I know you follow. We're going to need oil and nat gas. We're still going to use some coal. The world is still going to use all these, and we're still going to need nuclear power. There is a lot more tailwinds helping the nuclear sector. So I'd like to shift it over to how you're looking at uranium. I know that over the last couple of years, it's had a big rip. In the last couple of months, though, not so pretty. A lot of the stocks have pulled back because the case for more electricity is so strong, and because the case for nuclear power is still so strong, with all these new countries adopting it. Do you think this is an opportunity in uranium stocks, or do you think it may stay under pressure for a while longer? How are you playing it?
Well, I'm actually playing it very disappointed. I really thought they'd be doing much better than they have been. I mean, we just heard about one takeover, we heard about the Paladin takeover, but all of the stocks have really been under pressure since May. And I'm trying to figure that out. I mean, we own a bunch of them and I like them. I think the prospects for the industry are extraordinarily good. We are seeing government interest in expanding and boosting US and North American uranium production and processing. So, I mean, I think things look very good for these companies longer term. Shorter term, they seem to have run into a roadblock. I don't understand it. Looks like a buying opportunity to me. In fact, I might be making some more picks soon. I recently took a small uranium gain, but you know what? It might be time to get back in just because they've been sold off so hard. But I think that might be reflective of investor nervousness generally. And that, just to bring that back to what I was speaking about earlier, that might have a lot to do with the election, in that investors don't know who's going to win the next general election, who the big winner will be, because they have very different economic policies. And so that could impact stocks quite a bit. And so I think once we have more certainty on who might win, then we'll start to see money start to go into the stock market again. For now, though, a lot of people are doing what I'm doing, which is I have a big pile of cash, which is earning very nice returns in a money market account. It's very steady, very stable, and these higher interest rates are helping out my money market account quite a lot. I can't be the only one. I'm sure plenty of people are doing that exact same thing. And so until we have more certainty on the election, I think stocks generally could pull back. That said, in an election year, traditionally, in the second half of the year, that's when stocks start to rally. And just to bring it back to uranium, even though things have sold off quite a bit, that actually is good if you're looking for bargains. And people like me who have lots of money in cash, well, they have a lot of cash to buy things. Uranium stocks are looking cheap. That might be one of the things that actually takes off when that money gets put to work. So, as disappointing as uranium stocks have been in the short term, longer term, I think they look great. And they're as cheap as they've been now in months. So now might not be a bad time to buy.
Yeah, well, they have pulled back for a little while here. It's not been that long when you consider just how good of a run these stocks have gone on when really there was almost no market for them outside of kind of the diehard uranium bugs. More people are paying attention to the uranium story, but what companies would you look for then, Sean? Because the majors were outperforming, then a lot of the juniors caught up. And yes, they're off some of their highs. They're still well off some of their lows. Where is the sweet spot in terms of what you would be recommending?
Well, I'm glad you asked because there's a free, I believe it's free, Money Show presentation. And my presentation for the Money Show is called Uranium Goes Boom. And so I'll be talking about uranium. But one thing I have, which is a table I have made, is uranium producing miners and also those that will bring new mines online in the next 3 years. And I think that's the sweet spot for the stocks you want. Those stocks that are producing now or have near term production. And so I'll be speaking about that list, showing when the mines will be coming on. And I think that's where people should be looking. Now, that's my approach to investing. Some people might still like explorers. If that's what you want to do, go right ahead. It's just that in an environment where interest rates are higher than they used to be, it's harder for companies that have no income to actually keep things as an ongoing concern without maybe selling lots of shares, stuff like that, things you don't want companies to do. That's why I like companies that have cash coming in over the door or else will have soon. So they have a plan, they are going to execute that plan, and they'll have money coming in eventually. Those are the ones I like.
Well, Sean, I appreciate you breaking that down for us as far as which companies have your attention in the space. And I appreciate you plugging the event. We'll put a link to that in this show notes so that people can also attend that if they are interested. And we'll also put a link to Sean's Wealth Megatrends and Resource Trader for investors to check out Sean's work. Sean, always great having you on the KE Report just to discuss the markets. This was a fun one on the energy sector. And as always, looking forward to our next conversation.
Hey, thanks, guys. It's always a good time.